and welcome to the Global View, the show where we look at ways for investors to make money beyond the ASX listed universe. I'm your host, Olivia Grace Curran. Global stocks were mixed overnight, with European shares closing at a record high on reports the US and Ukraine have agreed to a draft minerals deal. As US stocks awaited Nvidia earnings, they also wobbled on fresh tariff threats. The S&P 500 managed to snap a 4-day run of losses, ending in the green, along with the Nasdaq, while the Dow dipped. Shares of Nvidia were up 4% ahead of the close, the AI leader reporting quarterly earnings after the bell. Nvidia forecast first quarter revenue above market estimates, expecting 43 billion US dollars compared with analyst estimates of 41.78 billion, with robust demand for its leading AI chips anticipated to persist. Its shares rose around 1% in choppy extended trading. Shares of AI server maker Supermicro Computer soared after the company filed its long-delayed annual report. Shares of marketing platform App11 shed more than 12%. Short seller Fuzzy Panda Research says it is short on the app, alleging the company steals data from Meta. Steve Madden shares fell more than 8% during the session, after the shoemaker's annual profit forecast came in below expectations. Management also noting a cautious outlook for FY25, notably over tariff concerns. Shares of medical device maker Stryker rose after Citi Research resumed coverage on the stock with a buy rating. Shares in Mexican restaurant and cafe chain operator Alsea slid after a fourth quarter profit miss. Shares of Instacart declined more than 12% in afternoon trading after the grocery delivery platform's fourth quarter revenue miss. In Europe, the Stoxx 600 index closed almost 1% higher, and German stocks continued the rally that began after Germany's federal election, with the DAX gaining 1.73%. Uncertainty around President Donald Trump's trade policy heightened worries among investors. During his first cabinet meeting on Wednesday, Trump caused confusion, indicating another month-long pause on steep new tariffs on imports from Mexico and Canada, saying they could take effect on April 2nd, and that he was going to do it on April 1st, but he's, quote, a little bit superstitious. A White House official said Trump's previous March 4 deadline for the 25% tariffs on Mexican and Canadian goods remains in effect for now, pending his review of actions by the two countries to secure borders and halt the flow of fentanyl into the US. Trump also floated a 25% reciprocal tariff on European cars and other goods. The Senate has confirmed Jamison Greer as the new US trade representative. On the economic data front, sales of new US single-family homes fell more than expected in January due to persistently high mortgage rates, the latest indication that the housing market and overall economic activity has slowed early in the first quarter. Benchmark US Treasury yields reversed earlier gains amid new tariff uncertainties. 10-year notes fell 4 basis points to 4.26%. The 2-year rose 2.5 basis points. The dollar index rose 0.2% as investors assessed the strength of the economy and tariffs outlook. The Aussie has fallen, currently buying 63.1 US cents, while Bitcoin has slipped further. One coin now worth under 84,000 US dollars. It has reversed gains. Oil prices touched a 2-month low after a surprise build-up in the US, and the growing potential for a Ukraine-Russia peace deal weighed on prices. Brent settled at 72.53 US a barrel. Gold prices eased as investors looked to inflation data on Friday and digested Trump's latest tariff plans. Spot gold fell 0.1%. For more on what's moving markets, I caught up with Kerry Craig from JP Morgan earlier.
Well, I think the earnings, largely sort of reinforced what the market was hoping for. There's not something that was really going to be turning the market down and probably taking away from the general narrative we've seen in the market this morning, or sorry, overnight in the US around some of the concerns of growth and tariffs, and generally, whether the US exceptionalism story is still in play. I think that, in line with some other announcements around capex spend plans still being on track, has gone some way to sort of deflating some of those concerns around whether there was going to be an overspend in these AI-related names that would lead to thinking about whether they were worth the companies or worth the value that people are placing on them at the moment. So more broadly, I think that the trend in the AI secular theme is still in place. But there's always the risk that these companies have such high expectations that they can disappoint the market. And it is all about the expectations versus reality. And I think for now, at least, we're seeing some of that expectation being met to be fair.
And from those results, how do you see it playing out in the market at open tomorrow?
Well, I think the real focus here is probably less on the micro at the moment and more on the macro. I think the earnings are helping. I think more broadly, when you look at the earnings season in the US, it has been one that's been very constructive. We look at what the earnings growth has done, and you still have seen quite a large number coming out from those magnificent sevens in terms of the earnings growth for the fourth quarter compared to a year ago. It's up of 30%. I think more importantly, though, you are seeing that pick up in terms of the rest of the US market showing earnings growth that's closer to about 13%. So that idea that you are seeing the broadening out, maybe some of the beneficiaries of this AI starting to feed through into other parts of the US market. And again, a rebalancing in that growth story and the earnings outlook between the very large mega cap names and what you're seeing elsewhere. It has been relatively slow. But I think, again, the macro is going to be dominating for now as we've got some weakness coming out of the US data. These growth concerns starting to come up, and the fact you've seen a big movement in US Treasury yields as well.
And we've seen Trump have his first meeting today. So I guess there's a bit of confusion regarding tariffs. He is, indicating they might be pushed back another month. So as you mentioned, a lot of macro uncertainty. How will we see that play out?
Certainly it is. And it's the thing that's hitting the market the hardest at the moment. It's the weakness you've seen in some of the business surveys come out, particularly on the services number from the US and the Purchasing Managers Index. It's the weakness in the consumer confidence number you've seen come out of the US in two different surveys, as well as the rise in inflation expectations from consumers in those surveys. And it all coming back to this sort of will they, won't they narrative around tariffs, who's going to get them, to what extent, and when they will be applied. When you have that sort of noise coming out of Washington, it is very difficult for markets to try and discern where things are going. And they generally go in consumers and businesses into wait and see mode. And when you do have that wait and see mode, that can weigh on growth. And that's the biggest concern, that you do have this slowing already in the US economy. And this is going to add to it and really take away from that idea about US exceptionalism. And the focus was that these policies were actually going to generate growth in the US economy, not take it away.
And how about the prospect of a potential Russia-Ukraine peace deal?
Yeah, I mean, there's a big peace dividend being priced in terms of what we're seeing in Europe at the moment. We've seen a big re-rating in European stocks over the first part of this year. For us, it's another reason why I think that investors should be diversifying internationally beyond just the US, which has been, a really strong play for the last couple of years. We think about the performance of the market, but it has been relatively narrow, that rally. And now we have an opportunity to look at other parts of the globe where we're seeing relatively better valuations, but we've got to be cautious around where we are with these negotiations and really the stability in that peace deal and whether it will be supported in the long run. So in the short term, you'd think, yeah, that's another great reason to think about some of the energy concerns being removed from the European economy, allowing for more growth. The outcome of the German election should hopefully lead to a little bit more fiscal spending as well. But we're only really seeing the green shoots really starting to come through in terms of the consumer to drive domestic growth. And again, we still have to worry about tariffs, again, that were announced around the auto sector in Europe just this week. So it's a bit of a push and pull in terms of what the outlook for Europe looks like. But ultimately, if there is a resolution to that Ukrainian-Russian conflict, it should be a boost for markets, as it's one less thing to worry about.
And how would you interpret the recent fall in the price of Bitcoin? It's just gone under 94,000. Does that show a real risk-off sentiment?
Yeah, Bitcoin and cryptocurrencies more broadly are very interesting. Obviously, they can be very heavily sentiment driven, momentum driven, and they don't really have a role in terms of are they there to measure a risk on or being a risk asset in a portfolio. At times, we've thought about them as being somewhat like a currency. At other times, they've behaved as an inflation hedge. Because they haven't been around that long, it's really difficult to assess exactly how they should behave in this different environment. If there's lots of liquidity in the market, if there's lots of money going into risk assets, then obviously you do have this big movement in cryptocurrencies. There was a lot of momentum behind it on the expectation you were going to see some big policy announcements out of Washington when it came to crypto. They haven't kind of materialized yet. So I think along with some of these broader concerns about risk assets at the moment and not having that political support that was expected to come, I think you're just seeing some of the heat come out of these cryptocurrencies at the moment. They're very volatile in nature. I think if you are looking at them in terms of a portfolio, you've really got to take into account that volatility. Think about the role they really do play, and really does that mean you should have a large weight to them in your portfolio at all?
And Kerry, I understand that there is some data coming out of the US later this week. What will we be looking for there?
There's a couple of things coming out, but I think the main focus for us is going to be the PCE or personal consumption expenditure inflation that comes out on Friday. We're wanting to see a softer figure. Obviously, there's been this concern around recession or even stagflation in the US, the fact that we're getting slower growth, and we've had some of those headline CPI numbers come out that have been a little bit stickier, leading to the idea that the Federal Reserve in the US is going to be on hold for an extended period of time. I think if we get some confirmation in the personal consumption expenditure measure of inflation that we are still in that trend of disinflation, that'll see the market start to think about the potential for the Fed to continue to ease policy rates in the coming quarters as they think about both some of the growth risks that are out there and that steady trend in inflation coming down. So that's going to be the key one for the week, given how we've seen the bond yields move and that repricing of the outlook for the Federal Reserve in terms of the number of rate cuts we may get this year.
And coming back home in Australia, we got a monthly inflation figure yesterday. What do you think that shows?
Well, it was positive in the regard that if we looked at the core rate of inflation there, we got another print that it was a little bit higher, but again, it sat within the RBA's target band for the second time, which hasn't been happening very often lately. So it's confidence there that we are within that target band, and if we do stay there sustainably, then the RBA can continue to ease rates. I mean, it's the first month of the quarter. The capture of what it captures within the CPI basket is mainly on the good side. It's not very broad based. It's very subject to revision over time as well. So I don't think there's huge takeaways in terms of what it actually means for the monetary policy outlook just yet in the RBA. But it is a positive in terms of saying we aren't seeing that big pickup in inflation that maybe is coming through elsewhere in the world, or that stickiness of inflation. But I wouldn't read too much into what it means for the policy outlook just yet, given we've got only 1 month of the quarter in terms of that inflation figure.
And what would be the next set of key figures that the RBA will be looking towards?
Well, the RBA it does effectively have a dual mandate. It's thinking about the outlook for inflation and thinking about the outlook for the labour market as well. So we've seen the labour market numbers come in. They've been still relatively tight with 4.1% unemployment, been hovering around that 4% rate for a while now. We had better job growth come through than expected. I think it's a combination of seeing that gradual loosening in the labour market and further job numbers that would back that up, and also that consistent trend in inflation staying within the target band that's really going to inform the RBA in terms of when they should cut next. And if you look at their last set of forecasts they effectively flatlined the unemployment rate over their forecast horizon, which to me at least suggests that they are uncertain around what it may look like in the future. So I think those combinations of the labour market and the inflation things are really the two that are going to drive the outlook for the RBA in the coming months.
And just before we go, getting one final check on where the local market is set to open when trade gets underway. SPI futures down 10 points. That does it for this edition of The Global View. Stick around, the Open is coming up next.